Welcome to the Markets Mindset. If you trade the S&P 500 futures and you ever feel overwhelmed by structure, this video is for you. Because reading S&P structure does not need to be complicated. In fact, you should be able to understand the current structure in about 60 seconds before you even think about entries, indicators, or setups. Today I'll show you a simple, repeatable process you can use every session to quickly understand what the S&P is doing and which side of the market you should be interested in. The first thing you look for is not a pattern, it's a range. Markets spend most of their time rotating between highs and lows before expanding. So ask, where's the most recent clear high? Where's the most recent clear low? Don't overthink it. If it's obvious, it matters. That range is your battlefield. Everything else happens inside or around it. Once you've identified the range, the next question is simple. Which side looks easier to take? Look for equal highs or equal lows, multiple rejections at the same level, weak follow-through near one side, or price compression into a boundary. The side that looks safe is usually the side that gets attacked. Liquidity builds where traders feel comfortable. Now zoom in slightly and observe internal structure. Ask yourself, are highs getting higher or lower? Are lows getting lower or higher? Is price respecting pullbacks or slicing through them? You're not predicting, you're observing. Internal structure tells you short-term control. Higher highs and higher lows gives buyers in control. Lower highs and lower lows gives sellers in control. Overlapping candles gives balance or chopped. Displacement matters. Find the last strong, decisive move. Strong candles, little overlap, and clear intent. That move usually reveals the true direction. Markets whisper before they speak. Displacement is the moment they speak. Once you find it, ask, did price respect it or reject it? That tells you whether the move is accepted or fading. Now quickly annotate on your chart. Session highs and lows, equal highs or lows. Prior day, high or low. These are targets, not barriers. Structure often exists to guide price toward liquidity, not away from it. Only after all that, you decide just one thing. Am I interested in longs, shorts, or nothing right now? Not entries, not targets, not predictions, just bias. If the answer is nothing, that's a valid read. Clarity is more important than activity. This process works because it removes noise. You're not predicting news, guessing reversals, or reacting emotionally. You're simply reading what price has already done and positioning yourself accordingly. That's professional behavior. Most traders skip this step entirely. They jump straight into indicators, entries, and signals without understanding structure. Those tools are meaningless. Structure tells you where you should trade. Everything else tells you how. If you ever feel lost on the chart, stop, zoom out, mark the range, identify the vulnerable side, check internal structure, find displacement, note liquidity. You don't need more time, you need a better process. Once you can read S&P structure in 60 seconds, trading becomes calmer, clearer, and far more consistent. Thanks for watching. Please like and subscribe.